What are mixed costs? Well, to begin with, mixed by its very nature means there's a combination of two or more items. Generally, mixed cost refers to a combination of fixed cost and variable cost. That is, you're going to have one or more fixed cost matched with one or more variable cost. So there can be multiple there. And the reason we categorize this rather than just individually as a fixed cost and individually as a variable cost, it's when those two costs are so inextricably tied together that they're accounted for together. One of my best examples would be a building and utilities, for example, that you are renting. The rent would be a fixed portion, and if you're paying whatever goes above that for utilities during that period of time, especially when the utilities fluctuate greatly between the type of natural resource you're using, like electricity versus natural gas, that type of thing. So if you accounted for those together, you'd want to look at how each of them moved together in comparison to something else. So how do you calculate what is your mixed cost and how one relates to the other, the fixed versus the variable elements? Well, generally what you do is you look at a high-low approach, which basically means you take the low point for the combination of the two and the high point, and then you try to make some correlation between the two. You subtract one from the other and see the difference between the changes in the two and see how they relate. So if one costs $10 and the other one costs $2 at a certain level of usage, and then later it costs $30 to $6, you would subtract one, the same one from the other and one from the other, and you would use that comparison to see how much it changed between the two. This is kind of like using the slope of a line to understand how two variables relate to each other. It's the most common method, but it's not a highly accurate method unless you do it over time and have tons and tons of data points. A more accurate measure, if you have the information and the data points, would be a regression analysis, which basically creates a line of best fit between the data points, so you understand what would be the expected value between the two when they, or how they correlate with each other. So with that being said, this is what mixed cost is, and this is how, once again, you calculate the relationship between the two components, fixed and variable elements.